What's going on, guys? Evan with Gibson Insurance Solutions. Got a little video for you here today. I'm going to explain something that really every insurance agent should be explaining to their clients. And we're going to talk about what split limit liability means with car insurance. So often there's a term out there called full coverage that a lot of people use, and often the saying is really not what it actually means. So what they're referring to is they have liability coverage and comprehensive and collision coverage, meaning the vehicle is going to be replaced or repaired if there's an accident. So we're going to talk about what full coverage really means, and ideally we're going to explain to everybody what split limit liability means. So if we go over to our drawing board here, first thing I'm going to explain is what split limit liability actually is and what all is covered in it. So basically, we'll use, for example, the state minimum liability in Georgia for our illustration here. And we'll talk about what state minimum liability is, how it works with split limit liability, and really the risks that you're taking by having, the state minimum policy. You may think that, oh, I've got full coverage, everything's going to be covered, I'll just get the state minimum. Not really how it works, and we'll explain here shortly. So, in split limit liability, you have three coverages, and it usually looks something like this when we're talking about state minimums. You got 25, 50, 25. Okay, so what this means is you've got a split limit liability of $25,000, $50,000, and $25,000 respectively. So the way this works and what the terminology means is you got your first number here, and that's your bodily injury coverage per person. Okay, so what this is referring to is, let's say you have a claim where you hit somebody, there's an injury at the accident. Somebody's got medical bills that you have to cover because you caused the claim, that sort of thing. In a state minimum split limit liability policy, $25,000 is the amount, the max amount that company is going to pay in a claim. The next amount you have here is your bodily injury per accident. So this covers the exact same thing as bodily injury per person. We're talking about mental distress, traumatic stress, things like that you cause or someone may claim on you for an accident, but also most likely injuries and stuff like that. You're paying out for someone's medical bills because of your accident. The bodily injury per accident a lot of times is a 2 or 3 times multiplier of the main bodily injury per person coverage. So basically if there's multiple injuries in that accident, that's the number that's going to pay out, but you still get no more than your bodily injury per person. So in this instance, you get no more than $25,000 per person of coverage, $50,000 for the total accident if there's multiple injuries. We'll break that down in just a second. The final number we have here at the end is our $25,000 of property damage, or PD. Basically what the property damage means is that's your damage to somebody else's vehicle, a business's property, things like that. So most instances when there's a car accident with an injury, they're also injured their vehicle. You also damage their vehicle, whether you totaled it or it just needs to go to the shop for a quick body repair. The property damage portion of your policy is what's going to pay out. Now, here's where we kind of get misconstrued between what actually full coverage is and what a state minimum policy does and how it actually covers you in a real event. So let's talk about an accident. So you're going down the highway, you run in the back of somebody, and you're going at a high rate of speed. No matter what you can do, you lock it down, and you end up hitting into the back of somebody, end up damaging their car, and people are injured in the accident. So this is how the insurance policy is going to play out, okay? So let's say you injure a person, and let's say they have $50,000 of injuries, okay? That one person, they can't go to work for a while. They had to get surgery, had to be transported to the hospital. We're talking a bad scenario, but it's not one that's uncommon. We see accidents every single day, especially if you drive down the busy highways like 400, 285, 75, things like that. This is how this is going to play out in an insurance situation, okay? So let's say this person claims $50,000 in medical bills. They take it to court. They are allowed to make that claim, and they bring that claim to you and say, hey, I need 50 grand. And so you say, okay, well, good thing I've got my full coverage policy. Well, not so fast. This is exactly how that works, okay? Let's say they claim $50,000 on you for their injuries, and you've got your state minimum policy, which $25,000 is the most that your insurance company is going to pay out if these are the limits that you've selected. So what ends up happening is you got their $50,000 claim minus the max that your insurance company is going to pay for you. You're still missing $25,000 in that claim. Now, who do you think has to pay that? Not the insurance company, because it's above your limit, but you have to pay that $25,000 in overage. You either come straight out of your bank account, or somebody can take it from the assets that you have, equity in your home, stuff like that. A lot of times they can garnish your wages up to 25% in the state of Georgia. So that's basically what we're looking at when we're talking about a state minimum policy and really the risks that you run with that, okay? Second number in how this plays out is the bodily injury per accident, okay? Let's say there's multiple injuries, okay? We have person number one over here who sustained 50,000 in injuries, okay? The policy only paid out 25, so you're going to be left with 25,000 in overages. But let's say person number two sustains 40,000 in injuries, okay? Pretty bad accident. Again, you get up to 25 per person, but no more than 50 per accident. So this 25 for that person and 25 for that person totals your 50. You're maxed out, but this person still has $15,000 in claims that you're going to have to pay for. Okay, so far we've racked up a $40,000 bill for yourself on your full coverage, quote unquote, policy. This is where we're at so far, and we haven't even gotten to the vehicle yet. Okay, let's say this person was driving a brand new F-150. Depending on the features and stuff like that you get, a lot of times they're going to cost around $45,000 for a brand new F-150. This is where property damage comes in. Okay, so right here we've got our bodily injury per person, 25 per person. We had our per accident. The total accident, you're going to get 50,000 of coverage, but there's a total of 90,000 in bodily injuries. 90 minus 50 is your 40,000 that you're still owing. Then we get to the vehicle, okay? So the point of insurance is to make somebody whole again, okay? This, you would expect the same thing for you. Somebody hit your car. If you total somebody's brand new F-150, you're expected to come up with a new one for them and make them whole again, okay? The exact quality they had before the accident. So let's say that costs $45,000. You've got $25,000 in property damage, liability per person. And then we take away the $25,000 because that's the max your policy will pay. You still owe $20,000, and that makes up the difference. So we add that to our grand total. We're going to have $20,000 there for the vehicle. So you got a grand total of $60,000 that you're going to end up owing that person out of your pocket, or the garnishment of wages up to 25% of your take-home pay. Again, that's the state of Georgia limit. And this is hopefully, helping a lot of you understand why, I try so hard to get somebody off of a state minimum policy, and why saving $30 a month on your car insurance to have, the legal limit, or to have the lowest policy or cheapest policy. This brings up the question is, if you get a policy like that, is it really cheaper? Yeah, you're saving $30 a month, but if you have a claim like this and you have to come out $60,000, well, maybe you should have went and paid another $30 a month for some adequate coverage, okay? I hope you guys liked this video. I hope it was informative to you. Don't mean to scare anybody out there, but my job as an insurance agent is to try to change the game and make sure that people understand what they're getting themselves into when it comes to a policy. And I owe it to you to understand what actually happens in a liability lawsuit, in an accident, how insurance works. You always drive by that accident and you never really see the inner workings of what's going on. This is what happens in the insurance policy and how things are paid out when we have a claim like that. And so that's what split limit liability means. If you have any other questions, feel free to reach out to me. We'd love if you support us. Go to trustgibson.com. We'd be more than happy to earn your business. And if you have a question about your policy, if you drive around with these limits and you've always wanted to see what it looks like to get something that's going to protect you a little bit more, reach out to us. Or if you want a policy checkup and make sure you're properly covered based on what you currently have under your assets and what kind of liability coverage you have on yourself, we'd love the opportunity to help you so much. So feel free to share this video, like our page on Facebook, go to our website, and drop in the comments below what you want to see next. What do you want to know more about? We're going to continue our homeowners insurance series, so you'll keep seeing videos on that. We can do videos on life insurance, commercial insurance, all kind of stuff. So let us know what you want to see next. Tag someone in the video who needs to see this, and I really appreciate you watching. So thanks so much. You guys have an awesome day.